The stock market. It's a phrase you've probably heard tossed around at family gatherings, on the news, or even scrolling through your phone. But what is it really? Why does it seem to be the center of so many conversations, debates, and even heated arguments, especially with that one relative who just can't help but bring it up? It's why your uncle won't stop talking about diversification at family dinners, waving his fork around as he explains how he's hedging his bets and riding out the volatility. For him and millions of others, the stock market isn't just a place to make money, it's a never-ending source of stories, opinions, and, let's be honest, a little bit of bragging rights. Think of it as a giant, bustling marketplace, but instead of cheese or vegetables, it sells tiny pieces of companies, stocks. Each booth represents a different business, from tech giants like Apple to classic car makers like Ford, and even quirky companies you've never heard of like Cheese Puffs Inc. When you buy a stock, you're not just making a bet, you're actually owning a sliver of a company. That means you get to share in its successes, and yes, its failures too. Whether it's Apple, Ford, or some up-and-coming startup, you're now a part owner, no matter how small your piece. The stock market is the engine of the economy, powering growth and innovation. It's where companies go to raise money so they can build new products, hire more people, and expand into new markets. At the same time, it's where regular people like your uncle, your neighbor, or even you can invest their savings, hoping those companies will grow and make their money work harder. Its ups and downs ripple through the entire economy, affecting everything from the number of jobs available to the price of milk at your local supermarket. That's why it's always in the headlines and why people pay so much attention to every twist and turn. When the market soars, optimism spreads. When it drops, people worry about their savings and their future. So, as 2025 approaches, everyone's asking the same question. Will the market charge ahead like a bull or hibernate like a bear? The answer could shape everything from your next vacation to your retirement plans. Let's dive in and see what's really going on beneath the surface. The stock market is often described as a casino for people in suits, but it's much more than just a place for wild bets. At its core, the market runs on the basic principle of supply and demand, just like any marketplace, but with much higher stakes and a lot more drama. When everyone wants a piece of a hot new company, the price of its stock shoots up. Investors scramble to buy shares, hoping to ride the wave of excitement and profit from the company's future success. But the mood can change in an instant. If bad news hits, maybe disappointing earnings, a scandal, or a global crisis, prices can plummet just as quickly, leaving investors stunned and scrambling to sell. The stock market is a global auction house where millions of individual investors and massive institutions like pension funds, hedge funds, and banks are all making moves at the same time. Each player brings their own strategies, goals, and risk tolerance to the table. Stock exchanges like the NYSE and NASDAQ act as the grand stage, connecting buyers and sellers from around the world. Today, most trades happen in the blink of an eye, thanks to high-speed computers and digital networks. High-frequency trading firms use powerful algorithms to buy and sell stocks in milliseconds, moving trillions of dollars every single day. These lightning-fast trades can influence prices before most people even realize what's happening, but beneath all the technology and chaos, what really moves prices isn't just numbers, it's expectations. Investors are constantly analyzing news, rumors, and data, trying to predict what will happen next. Good news, like a breakthrough product or strong earnings, can send stocks soaring, while bad news can send them into a tailspin. The market reacts not just to what's happening now, but to what people think will happen in the future. It's a relentless guessing game about the future, fueled by endless streams of data, wild speculation, and the powerful force of herd mentality. Sometimes, the crowd gets it right. Other times, it creates bubbles and crashes. In the end, everyone's trying to outguess everyone else, hoping to be just one step ahead in this high-stakes, ever-changing game of chance and strategy. To predict 2025, let's look back. The early 2020s saw a pandemic crash, then a wild rebound fueled by stimulus and tech stocks. Then came inflation, and the Fed slammed the brakes with higher interest rates, sending stocks tumbling. Recovery was rocky, investors obsessed over every Fed move, while AI stocks sparked a new frenzy. The result? A split market. AI giants soared, other sectors lagged. The economy dodged a deep recession, but growth was uneven. Investors are left dizzy and uncertain, stepping into 2025 with both hope and anxiety. The stage is set for another unpredictable year. What do the experts predict for 2025? They can't agree. Bulls see inflation easing, the Fed cutting rates, and AI driving profits. Fuel for a rally. Bears warn inflation could linger, rates might stay high, and tech stocks are overpriced, setting up a fall. Then there are the sideways ERs, expecting a flat, frustrating year with no big moves. In this scenario, picking the right stocks matters more than betting on the whole market. The only consensus? Uncertainty rules. No one has a crystal ball. Risks for 2025? Plenty. Inflation could flare up, forcing the Fed to hike rates and spook investors. Global turmoil, wars, supply chain shocks, or a slowdown in China or Europe could ripple through US markets. AI mania could turn into a bubble, and new tech regulations could hit big companies hard. US politics, debt debates, tax fights, or a wild election could add to the chaos. Any of these could trigger the next big market move. The only certainty is uncertainty. Here's the truth, nobody really knows what the market will do next, no matter how confident they sound. The market is a chaotic system, shaped by millions of unpredictable decisions and surprise events every single day. Black swans, like the 2008 crash or COVID, blindside everyone, no matter how prepared they think they are. Even predictions can change outcomes, creating self-fulfilling prophecies or sudden panics among investors. That's why long-term investing and diversification matter so much more than trying to time the market perfectly. History shows, those who buy and hold usually end up beating the market timers in the long run. The future is always a mystery, and that's what makes investing both challenging and exciting. So, what have we learned about the 2025 stock market? If there's one thing that stands out, it's that the market is as unpredictable as ever. Every year brings new surprises, and 2025 is no exception. We've seen wild swings, unexpected winners, and sudden downturns that no one saw coming. The truth is, no matter how much research you do or how many experts you listen to, the market has a mind of its own. It's unpredictable, emotional, and shaped by forces no one can fully control. From global events to shifting technologies and even the mood of investors, the market reacts in ways that can leave even seasoned pros scratching their heads. Sometimes it feels like a roller coaster ride, thrilling, nerve-wracking, and impossible to predict. Experts disagree, surprises are inevitable, and betting on any one prediction is risky. You'll hear confident forecasts from every direction, but remember, no one has a crystal ball. The smart move? Focus on what you can control. Your own decisions, your goals, and your reactions. Instead of chasing the latest headlines or panicking over every dip, take a step back and look at the bigger picture. Have a plan, diversify, and think long-term. Building wealth isn't about making a quick buck. It's about planting seeds and letting them grow over time. Diversification helps protect you from the unexpected, and a solid plan keeps you grounded when things get bumpy. Don't panic when the market drops, because downturns are a normal part of the journey. Staying calm and sticking to your plan can make all the difference when others are losing their heads. And don't chase every hot trend. The latest fads might look tempting, but they often fade as quickly as they appear. Staying focused on your own strategy is usually the wiser path. The market is a tool for building wealth over decades, not days. True success comes from patience, discipline, and letting your investments grow steadily, even when it feels slow. Stay curious, keep learning, and don't be afraid to ask questions. The more you understand, the better prepared you'll be for whatever comes next. But don't bet the farm on forecasts. Predictions are just guesses, and even the best can be wrong. Trust your plan more than the latest headline. And maybe, just maybe, have a polite excuse ready for your uncle's next stock market rant. After all, sometimes the best investment is in your own peace of mind.